Picture this. It's spring, listings are popping up, your group chat is full of Zillow links, and for the first time in a while, the numbers don't feel totally brutal. Mortgage rates have dipped a little, and that tiny change is enough to make buyers breathe again. Today, we're walking through what's moving right now in housing and money, and then we're going to zoom way in on something that quietly shapes all of it: stress, communication, and how we take care of ourselves for the long run. I love that you're starting with the vibe, because that's exactly what it is. A vibe shift. The average 30-year fixed rate slid down again this week, and it's being called the most affordable spring buying window we've had in about 3 years. Now, affordable is relative, but when rates drop even a bit, monthly payments soften, and people who are on the edge suddenly re-enter the conversation. And the wild part is, even people who already own homes, people who locked in those gorgeous under 5% rates, are starting to budge. We've been calling it the lock-in effect for a couple years. Nobody wants to sell because they don't want to give up their low rate. But now more than a third of homeowners say they're ready to list this spring anyway. That's huge, because it suggests life is starting to outweigh rate math. A new job, a new baby, a divorce, a move to be closer to family. Eventually people stop optimizing for the perfect mortgage and start optimizing for the life they're actually living. Okay, but if someone is buying right now, there's a second numbers story that matters just as much as the interest rate: credit scores. And after years of talk, there's finally a real shift. Fannie Mae and Freddie Mac are now accepting VantageScore. That's a big deal because a lot of the mortgage world has been tightly tied to one scoring model for a long time. It's progress, but with a footnote. The industry is still pushing for more flexible credit reporting options, especially in cases where borrowers have strong credit, but their story isn't perfectly captured by the traditional system. Think of people who pay everything on time but don't use credit cards much, or folks who have thin credit files.
So, rates loosen a little, credit scoring opens up a bit, and homeowners are more willing to move. But the market is not moving evenly everywhere. New Jersey is a good example. Overall prices are starting to cool slightly in some areas, yet Newark is doing its own thing. Median single-family prices there jumped more than 7%. That's the all real estate is local lesson again. A state can be cooling, and a city can be heating up, depending on jobs, inventory, transit, development. So many factors.
Now for the part that isn't as fun: foreclosures. New data shows foreclosure auction activity is picking up again, creeping toward the levels we last saw in early 2020, before the pandemic backstops kicked in.
Yeah, and it's a reminder that even when headlines talk about a strong housing market, not everyone experiences it as strong. Some households are getting squeezed by prices, by debt, by job changes, by medical costs. When the cushion thins out, delinquency becomes auction activity.
And speaking of companies adapting, there were leadership shakeups across major real estate firms this week. New CEOs stepping in, industry veterans moving to new shops. Those moves can look like gossip, but they're usually signals. Firms are prepping for the next chapter of the market, especially as banking feels pressure from another corner: office buildings. Some regional banks are profitable overall, but they're dealing with more problematic loans tied to office real estate, and their stock prices are reflecting that stress. Which brings us to homeowners again, but from a different angle. Home values have stayed high enough that tapping equity is back in the spotlight. SoFi officially launched a HELOC product, home equity line of credit, basically giving owners a way to borrow against the value they've built.
It's one more tool, but it's also one more decision that can go right or wrong depending on rates, income stability, and why you're borrowing in the first place. Renovation to improve livability? Maybe. Using it to patch a budget every month? Riskier. And that feeds directly into the bigger money mood right now: retirement anxiety. A new survey says worker confidence in having a comfortable retirement fell to 61%. Social Security worries are a big part of that, and so is the basic reality that everyday costs keep rising.
People aren't just thinking, will I have a nice vacation? They're asking, will I be okay if I live longer than my savings? And that question is getting louder, which is a perfect bridge to the second half of today's episode, because the theme underneath everything we've talked about, buying, selling, borrowing, saving, is stress. And stress has a celebrity villain right now: cortisol. Cortisol gets blamed for everything: weight gain, puffy face, bad sleep, burnout. But doctors are trying to correct the internet narrative. Cortisol isn't some toxin you need to detox. It's an essential hormone. You need it to wake up, to focus, to respond to challenges. Without cortisol, you don't function.
So the story isn't cortisol is evil. The story is chronic stress is expensive. And not just expensive in a metaphorical way. Chronic stress can mess with sleep, appetite, energy, mood. Then you spend more money and more time trying to fix the symptoms. You buy supplements, you chase new routines. You feel behind before the day even starts. It's like blaming the smoke alarm for the fire. Cortisol is the smoke alarm. It's there to respond to what's happening. The question is, why is the alarm blaring all the time? Is it overwork? Is it financial uncertainty? Is it conflict at home? Is it doom scrolling at midnight?
And that's where the next piece comes in, how we argue. Because if your home life is full of conflict or your relationships feel tense, your stress system doesn't get a break. There was a really blunt question in the research this week. What if you're not just in a lot of arguments? What if you're contributing to why they go badly? That question stings because most of us think we're the reasonable one. But there are tells. One is keeping a mental scoreboard, like I apologized last time, so you owe me, or I always do the dishes, or I've been the bigger person for months. Another tell is the language. The moment you start saying you always or you never, you're not describing a specific problem anymore, you're making a character argument. And once someone feels like their character is on trial, guess what happens? They stop listening and start defending.
And that turns the conversation into a competition. Who's right? Who's worse? Who started it? But experts keep saying, if you want the relationship to survive, the goal can't be winning. The goal has to be solving. Focus on the actual issue in front of you. Let's make it real. Instead of you never help around here, you can try. I'm overwhelmed by the chores this week, and I need us to decide who's doing what. Same underlying frustration, totally different landing.
Or instead of you always interrupt me, it becomes, when I get cut off, I lose my train of thought and I feel dismissed. Can we slow down and let each other finish? That's still honest, but it's specific. And it's about impact, not a verdict. And when you fight fair, you're not just protecting feelings, you're protecting your nervous system. You're lowering the amount of time your body has to spend in that activated, braced for impact state. Which brings us back to longevity and the long view. There's a whole movement gaining momentum around living longer and living better longer.
One of the most fascinating stories this week. An AI company, In Silico Medicine, is creating what's being described as the first dedicated longevity board in the industry, specifically aimed at using AI to discover drugs that target the aging process.
That sounds futuristic, but the problem is already here. Experts are saying our retirement and healthcare systems were built around a world where living to 65 was the milestone, and living to 90 wasn't as common. If the system assumes a shorter life, it underprepares people financially for a long one. So when retirement confidence drops, it's not just pessimism, it's people sensing that the timeline has changed, but the structures haven't. Longer life is a gift, but it also means more years to fund, more healthcare decisions, more planning, more uncertainty. And while we're talking about planning and risk, there was another sobering data point. Less than half of crowdfunded startups are still operating 4 years later. That's not a slam on founders, it's a reminder that early hype doesn't equal long-term survival. It's the longevity question again, just in business form. Starting is one thing, staying is another.
Which ties into the most practical longevity trend of all, exercise. But stripped down to what busy people can actually do. Efficiency is the new workout obsession. High-intensity sprint-style training, plus slower, steady work, sometimes totaling as little as 30 minutes a week. Not because everyone is lazy, but because everyone is maxed out.
And it's a nice counterpoint to all or nothing thinking. You don't need a perfect routine to get benefits. You need something you'll actually repeat.
Even at the policy level, this theme shows up. Oklahoma is considering a bill to increase longevity pay for state employees, basically acknowledging that staying in public service for a long time deserves a bigger reward. It's another signal that institutions are trying in small ways to recognize long-term commitment. So if we zoom out, today's stories all rhyme. Mortgage rates dip, and suddenly the market breathes. Credit scoring expands, and more people might get a fair shot at financing. Homeowners consider selling even if they'd rather keep their old rate, because life keeps moving. Retirement confidence slips, because the future feels less guaranteed.
And underneath it all, stress isn't just a feeling, it's a system. And it can be managed better when we stop demonizing cortisol and start improving the environment around it, including how we argue. That's the resolution I keep coming back to. The goal isn't to eliminate stress entirely. It's to build a life where stress doesn't run the whole show. In money, that might mean planning for longer timelines and being cautious with debt. In relationships, it might mean dropping the scoreboard and focusing on the one issue you're actually trying to solve. And in your body, it might mean realizing you don't need to fix cortisol, you need to support recovery.
If listeners take one thing from today, I'd say take this. When a headline makes something sound like a simple villain, rates, credit scores, cortisol, your partner, pause and ask what's actually happening underneath. Usually the truth is more nuanced, and that nuance is where better decisions live.
And if you're staring at a home listing, a retirement account, or an argument you keep replaying in your head, maybe this is your sign to zoom out. What's the real problem you're trying to solve? And what's one small move you can make this week that your future self will thank you for? Please like, subscribe, and join us at I Am Healthy Money. Life has its ups and downs, but you're not alone. From 2 to 102, we're in this together, right here, right now. We love ya.